Bonjour, monsieur, madame. Bienvenue. Good morning, ladies and gentlemen. Welcome to the next phase and the relaunch, as it were, of the Climate Finance Accelerator program. For those who were with us a couple of years ago in 2019, would realize that this is yet again another phase in that long journey that we've come so far. Will tell us much later. Will give us a brief history of where we've come from since 2017 when this program started actually and was launched in London and was subsequently launched as the CFA Nigeria in 2019. First things first, before I start, I would like to thank those who are participating today who have made this happen, those in a very big background and have contributed a great deal to this session today. The British High Commission, who has been a great supporter of this, and especially in the name of Mr. Guy Harrison, who has been a great supporter of this initiative from its onset and has participated extremely closely with us in bringing us all of this to bear. The BEIS, which is the British the Business Engineering Investment of the Great Britain, who has sponsored this great initiative, looking to pull together and catalyze private financing into sustainable finance in Nigeria. The PwC and Ricardo, who have project managed this and has been at the background trying to connect both the Nigerian entity as well as the British investors to this program, but more importantly, also locally, the Adam Smith Initiative International, Adam Smith International, who have actually been the local project manager of all of this in the name of Nick Aslam, as well as Antonia, who have worked exceedingly to gather all of these people together today. And finally, not forgetting our hosts, as I said earlier, the NESG, who are our hosts for today and are working diligently to make sure that we have a very good discussion today. House rules, please make sure you're all on mute whilst every discussion is going on so that we don't have any feedbacks, from anybody speaking. And I bid you and I wish you well. I'm hoping that Mr. Guy Harrison is actually on cue to bring in the welcome notes to us. I don't know if he's there already. If someone can confirm, please, if Mr. Guy Harrison is there. He's not quite here with us. Perhaps actually, whilst we're waiting for Mr. Guy Harrison, perhaps I can go to Mr. Mac George, who will speak to us. Mr. Mac George is the British climate finance advisor to the Nigerian government, mainly the ministries of finance, environment, budget and planning, and also Nigeria, and working eminently with to help us enact our NDCs. So I'll hand over to Mr. Mac George at this point, just to give a brief note on what has been going on in this space so far. Thank you, Mr. Mac George.
Thank you, Olumide. Good morning, everyone. It's a pleasure to be here. I am fortunate to be the NDC, the climate finance advisor to the Nigerian government. And in that, guise, I get to be a part of what is happening across the climate finance space in terms of the revision that we've just posted and to the UNFCCC ahead of COP26, and in terms of implementing and working going forward what we are. So the parties and the persons here today are all my constituents and all people who I'm very pleased to be a part of. Why am I here? What am I here? I just basically want to highlight the things that are actually ongoing. A number of people, obviously, a lot of us already are aware of what is happening in this space. But I just want to highlight areas that the NDCs, are working towards or have worked towards. Some of my colleagues who worked very assiduously to actually develop the NDC for Nigeria are here, Mr. Hans Veron and the Ricardo team. But this is what we're looking at, and we have a significant amount of support that is available to us. And what has happened on the NDCs, we've had support across, I think it was 17 IPs that we had, support. We had support from the German government, the GIZ, from the UNDP, IRENA, the ILO. We also had significant support from UNIDO, the Islamic Development Bank, and of course our great friends at the African Development Bank. The UK government has been very much a great partner with us on the NDCs. And what we're really looking at, we're looking at various different areas: clean cooking solutions, nature-based solutions, green jobs, the energy balance. Of course, vulnerability and gender were very high, and it's based upon this that we've been able to sign the national action plans and the gender assessments for climate finance. The president recently signed that. So these are things that are ongoing and all related to where we're going and looking towards creating the NDCs and finance. The climate finance space is, of course, significant. We have a public-private relationship that is building up. The Nigerian government having already, invested in the green bonds program, and we're looking at the third issuance as we speak, and that's being worked upon with the capital markets. And you'll be hearing from gentlemen from the FMDQ and all of that. But really and truly, the country is gearing up and is working towards this. Part of the initiatives that we have done as the NDC partnership is to look at how we collate, how we manage, and how we settle the frameworks for greening our economy. Nigeria signed up to the Helsinki Principles in 2018, 2019, which basically commits us towards going towards a green and low carbon resilient economy. How do we get there? That's basically through the driver of the government and our planning process. And what we're trying to do looking forward is actually looking and creating a system whereby we call it a climate finance database, but really and truly it's basically all the projects going through would be screened and they would be evaluated in terms of various different climate mitigation adaptation criteria, which would now lead towards them being allocated and prioritized based upon that scoring. That's a process that we're working towards, such that eventually every MDA would be competing, would be pushing and to design equivalent projects along this way. That's a critical point that we're trying to push. What would that lead to? That would lead to us having a database, a pipeline of credible projects that have very quickly been screened at the first level for climate finance and the like. And the government will be committed to some form of financing or support. That's something that would also feed into the UK climate finance accelerator that we're talking about today, we're launching, because this is very clearly a public-private partnership that we're looking at, and you need that whole gamut, to that whole process to go across. So those are the initiatives that we're looking at along the way. The GCF, the African Development Bank, so many different processes. We've seen even state governments work towards and looking towards having their own green bonds, and there's so many different opportunities that we believe could happen. So as an advisor, I get to sort of see and have a helicopter view of what is happening in here. But the UK Climate Finance Accelerator is really a great opportunity for us to partner, for us to have this government relationship, to go from the planning stage all the way through to the investment stage. And part of, like I just mentioned, the key part that we believe will be a driver would be the Climate Finance Accelerator. So I think I've taken up too much time speaking, I don't know, just explaining where and what is happening here, the local initiatives being put together. So I will hand back to our moderator, Mr. Olumide. Thank you very much.
Thank you very much, Mr. McGeorge, for that brief intro into why we're here. It's probably a good point to segue into and introduce yet again Mr. Guy Harrison, who is the Economic Counselor at the British High Commission in Lagos, who has been an ardent supporter of this program from its onset. Just to give us a background, if you will, and a historical of the journey we've had since 2019, where this started from, so 2015, how this started, where it started, and why it was started in the first place, and why it's so important, as it were, to both the Nigerian government and the British government for this to be successful. Mr. Guy Harrison, the floor is yours, sir. You're on mute at the moment, sir.
Olumide, thank you very much indeed. Can I just check that everybody can hear me? Because I just had a few teething problems switching to our systems this morning. But good morning, everybody, and thank you so much for joining. And thank you in particular to Olubola and Mark George, who is a tremendous partner and colleague to be working with on climate finance. And I was delighted that he was able to join us as well to give us the perspective from the Nigerian government. It's a great pleasure to be launching, or should I say perhaps relaunching, the Climate Finance Accelerator program in Nigeria. As you can see from the slide on screen, this has been a journey, and it's been one which has had its twists and turns over the last couple of years. But it's good to be in a position to resume the work and for the UK government to support that work, which started in 2019 in Nigeria. And it's particularly timely as 2 weeks ago, Nigeria published its nationally determined contribution. This is what the CFA program, which you can see on the second slide, and let's hold that slide for a moment, is particularly welcome because we have an NDC from Nigeria, which is, I think, admirable. It is very welcome. The UK government has welcomed it, but we will know, all of us, that the NDC has set a very high bar for achievement and for delivery. And in particular, I think one of the things that we'll want to discuss this morning is on how to attract the investment which is essential for delivering the NDC commitments. It was very flattering that the NDC referred to the Climate Finance Accelerator in its document, and we want the CFA to play a role in mobilising and facilitating private sector finance. We all know that with an estimated cost of up to $177 billion to deliver the NDC contributions, commitments, public money alone cannot do that job. So the CFA is very much part of the UK's and global efforts to take action at the right scale this decade by providing practical ways to enable partner countries to finance and deliver their NDCs. It takes place in Nigeria alongside a very major and significant set and portfolio of development finance institution support, development partner support, and that includes also, we should see the Climate Finance Accelerator as part of a portfolio of other UK government funded programs. Some of you will recall also UK Aid's Solar Nigeria program. So we are very much also building on previous technical assistance support to Nigeria. Let's maybe move on to the next slide. Can we have the next slide, please? Okay, well, I'm going to move on. An important part of today's workshop is not only to address what is constraining the delivery of bankable renewable projects, but also to hear your views on what kind of model would work best for the Climate Finance Accelerator in Nigeria. The slide in front of you, and I'm not going to go through the individual points here, but let's consider these, and I'm sure that we can come back to these in the plenary discussion and in Q&A afterwards, suggest some of the areas that we think the Climate Finance Accelerator can help convene and facilitate and deliver for Nigeria, for both the government, but also crucially for the private sector. We see the Climate Finance Accelerator acting as a convener and a facilitator, and one that encourages public-private collaboration. It can bring together project developers and those who can finance projects or change the system. We know that also, I think, policy and regulatory issues are going to be important in terms of expanding that flow of finance and expanding the portfolio of bankable projects. And crucially, a core principle of the CFA is that it is locally owned and driven. We recognize that the routes to success differ across the countries that the UK is working in. The High Commissioner and Deputy High Commissioner are delighted to be working with our partners, Nigeria Economic Summit Group, alongside Adam Smith International, and the Global Climate Finance Accelerator Program Manager, PwC. At this stage, I also want to acknowledge the contributions of Ricardo, who played a major role back in the 2019 pilot, and without whose work and hard work, and I also know that went into the NDC, we would not be here this morning. And in particular thanks, and I think he is joining and can maybe speak later, to Ian Callahan. You saw at the opening slide, Ian was one of the people, along with Tessa Tennant, who thought of this concept originally. So it's also great that he can join today. And Ian is also one of the people with whom we will be working with back in the UK, who can ensure access to the expertise of the City of London and the UK's financial sector. In closing, success from today's workshop will be getting your views on how to expand the pipeline of finance and increase the number of bankable projects. This is very much a joint venture. We see the Climate Finance Accelerator playing a role, but very much a role working alongside with all of you in Nigeria's financial institutions who know the ground far, far better than we do. I very much look forward to the discussion that I know that we'll be having, and thank you very much indeed. It is a continued pleasure for the UK government to be supporting this initiative. Olamide, back to you. Thank you.
Thank you very much, Mr. Guy Harrison. Appreciate that intro into the history and a brief discourse as to what it is we are to expect this morning. Time is obviously moving on very swiftly. Yes, we're all looking forward to the panel discussions, but before I get to that, perhaps it's a good time to just talk some about what the landscape of the financial landscape looks like at the moment within the Nigerian discussion point. Now, clearly, infrastructure finance, which is what we are here to talk about today, falls into four main categories, as it were. The project identification, which is obviously when you seek the project you're looking to identify and decide on what it is you're going to finance. In this case, it's quite important because obviously we're talking about climate finance. So it's not just any sort of infrastructure. So there are certain criteria, certain taxonomy that we need to review projects against to ensure that they meet the benchmark standards, as it were, for projects to be selected. So there's a process that you go through. Typically, we fall back on the ICMA principles, the Green Bonds principles of project identification and project selection. But also, once that is done and you've decided on projects, there's a project development stage. Where this project obviously, is actually cooked up and tried to bring to bear. And this are the early stages of a project before it then moves into what you might call primary financing primary project finance stage and subsequently refinancing. Now, clearly, as you go through these phases, your risk and capital requirements changes, as it were. And so those who actually participate in this and the type of finance you're looking for obviously changes across the spectrum. On the screen there, we see that at the very early stages, obviously you need grants, you need technical assistance, typically from DFIs, probably from government, policy changes. Then as you go into project development, obviously people get interested in this, and there's a level of equity that is required beyond that of those who actually started the project, and we look externally to new equity. But not forgetting, at this stage, obviously the risk is pretty high and people are still a bit wary. And before you bring in the financiers, as it were, you're looking for some sort of concessional loan just to buttress and buck this up before you then move into your project financing element, where you attract market rate type loans from banks and the likes. But in some stages, because the risk is still very high, you will need some level of guarantees to just buff that up. And once that's done and the project obviously goes into its operational stage and we need more financing for expansion, then we obviously look for structured debt, maybe to refinance our existing position to be able to expand or even bring our cost of financing down, because obviously the risk is now being managed properly. Next slide, please. So to that extent, you now ask yourself, what are the type of institutions or people who get involved in this? I wouldn't really go into this, it's quite detailed, but you can see the screen. And by the way, the slides will be shared, so there's no need to take notes except for your questions much later. But these are the type of people you'll find in this space who would typically address some of this stuff. Both, all throughout the project identification phase development. Like I said earlier, you've got people like the World Bank who will come in to help you identify projects. You will probably rely on some organizations who would help you with the standards. And then of course, project development, you probably fall back on DFIs or the development banks, be international African development banks. In fact, in some cases, locally, we have people like S Holdings who would probably try and put some money on the table to help build these things up. As you move into project finance, things become a bit more interesting as you find the commercial banks get involved, some of whom we have on the panel today. And then of course, international financiers. And then of course, we look to the capital markets, which is where all of this is ended, where, pension funds and patient finance is then introduced into the mix. Next slide, please. So all of this stuff, we've made reference, Mr. McGeorge, as well as Mr. Harrison made reference to our NDCs. We've got our national determined contributions. All of this is looking to decarbonize and green our economy. And this is basically the way forward, because right now, if we're to actually meet our obligations under the Paris Agenda, we've got to catalyze private financing, because government just can't do it on their own, literally. But we've got to catalyze private financing into this space. Now, you and I know that, look, these are people's money. People worry about risk. How do you price risk? And this is some of the things that I'm hoping my people will talk about on the panel today. But ultimately, it's about financing the focus areas where the NDCs have been highlighted. Renewable energy, especially. Nigeria, if you've lived in Nigeria, or you've got anything to do with Nigeria, you will know energy, power is one of our biggest issues. We need to fix that. But we cannot do it the same way that everybody else has done it. We've got to start moving away from, crude oil and generators and all of that stuff towards renewable energy. How we do that? Do we include gas in that conversation? That is something that we need to discuss at some point. Yeah, energy efficiency is important. We cannot keep wasting energy. Look, just simple things that we can do, but obviously we'll not discuss on that today. But just think about it for a second. Energy that I'm not using is something that somebody else can be using. So if you're wasting energy, you're creating problems on the atmosphere as well as the economy. Agriculture, food security is important. We need trees to protect and decarbonize the environment. Land use is some big opportunities here. Water and industry, processing, produce use, these are areas that the NDC focuses on and provide massive opportunity for financiers. However, there's a massive finance needs here. The figures speak for themselves. I wouldn't go through them, but you can see them themselves. Now, that speaks to the investment gap. Now, it's the investment gap area that I'm actually interested in, because in closing that provides massive investment opportunities for both local and domestic and foreign investors to come in. We've got people logged in globally today. At the moment, we've got near enough 250 people logged in, and they're logging in from as far as Australia, America. These are people that are interested in financing projects in Nigeria. But let's face it, we've got some money in Nigeria also. We need to catalyze that for this investment. Next slide, please. So why are we here? If things were so smooth, we would not be having this discussion. Clearly, there are barriers to financing within this landscape. And that's one of the main reasons why we've got the panel discussions today, to try and go through some of this and see how we can alleviate this and actually begin to smooth the process out. We've got poor financial institutions. The understanding within the institutions is very, very low. Technology access is very low. We need to understand how we can actually enhance our capabilities, improve on that, and actually be able to deploy that. Poor quality of projects, especially data. Data is a massive issue, and that's one of the reasons why people think it is risky to invest in this environment. The more transparent we make ourselves and projects, the more structured these projects are, the easier it is to build the pipeline. Low availability and access to data, I've spoken about that, especially on the ESG standards. We need to educate ourselves some more. We've been doing some capacity building through the Green Bonds program, which is financed through the British government yet again, and sponsored by the financial sector deepening Africa, in collaboration with the FMDQ and Climate Bonds Initiative, who I used to work with back in the day. We spent an awful lot of time capacity building, but there's still more to be done. More importantly, infrastructure needs long-term finance. We seem to focus more on short-term. We need to find a way of actually pulling more long-term affordable finance into this space. And the acceptability of standards is important. As you can see in the last year, especially, we've had umpteens and myriads of standards and reporting requirements being thrown at us globally. They will come to impact us one way or the other. It's either we enact them or they will stop financing coming to us. So there is no way things like TCFDs and the likes will come to hound us. We need to understand what this means, how this impacts our economy, and how we can utilize this to bring in more finance into this space. More importantly, fragmentation of policies and regulations. Now we have, through the SEC, we've got the green rules on green issuance. We've got that already launched, and it's working perfectly within the SEC for bonds, loans, but we need to do a bit more. The financial institutions in Nigeria need to embrace this. They need to understand what the ESG policies are, how climate risks will impact the exposure of their current portfolio, how they can basically re-strategize and reposition themselves to attract more green financing so that they can finance more of this green infrastructure. These are some of the things we'll look to much later. Next slide, please. Next slide. Apologies if I'm running through this. I'm really excited to get to the panel discussion because I know you're not here to listen to my voice. You know, so we will conclude in saying that, look, there's much to be done. We need to bring climate finance flow and grow the space. Obviously, there are exceptions to this. There are certain sectors that we cannot finance, you know, based on that. But there's a need to increase the supply to meet the need, the financial need, to plug the gap and actually begin to finance a lot of the infrastructure gaps that we have, especially in energy. As I said earlier, there's a shortage of projects right now, but I believe that by understanding the requirements, the standards, and being more transparent and providing the data, we collectively can begin to understand what is required. And more importantly, there's a need to build up the skills level. There's a massive need. And I know the British government, through its various agencies, are working hard. I know Mr. McGeorge is working with the ministries to get this situation corrected. We're all here to work together. So I wouldn't bore you. As I said, these slides will be shared after the program. But just before I go into the panel discussion, there's a slide that I actually want us to view, which is the next one as a segue into the panel discussion. And I'm hoping that my panelists are all already queuing themselves up. I will introduce them shortly. Some of the recommendations that came out of the mapping, and by the way, this mapping exercise took the best part of 18 months. So following the initial workshop and conference that we had in 2019, which was a lot of people got involved. We had Access Bank, we had Union Bank, we had Sterling Bank, to say, but we also at FCMB as well, partner with us, giving some real good advice to project proponents on how best to present their projects for as a bankable entity for them to be able to access finance. A lot has happened in that space. The world has changed, COVID has come along, a lot more understanding has come into the space. For instance, since then we've had the impact credit guarantee limited being launched by the DBA, the Development Bank of Nigeria, since then. So we've had more entrants, with more institutions enter the space to provide more access to finance and de-risk this space. So, some of the recommendations that came out of this obviously was, provided a right focus to skills awareness, especially within the financial institutions and the federal government. Also, in terms of how do you pull together both financial and political interests. But as I said, there is actually a template that I wanted to review just before we go into the panel discussion, which I think we're running late on. And that's the next slide. So if I can have the next slide, please. Right. I think we're missing a slide, but nonetheless, maybe I'll speak to it. So essentially, one of the things we're looking at is, so we have a space. We know we have projects that we need to finance, but the projects are struggling to get finance. Why is this? Clearly, it's two things. It's either the financial institutions don't understand the space, or the project financiers themselves do not understand what it is that bankers need to provide them with the right criteria. One thing is certain, they don't typically have collateral that the banks seem to have, they're asked for. So there's a need to de-risk this project by either bringing some form of guarantees or some sort of first loss investment, or perhaps concessional financing. Now, there's a map there that talks about how this comes together. But in the absence of that diagram, I would like to invite, as the panel discussion, which is next. And on the panel today, I have a number of people who will speak to this. And the idea, twofold, is one, how do we increase the level of financing that comes into space? More importantly, how do we mobilize private sector financing by de-risking the sector so that it becomes more attractive to private financiers, and subsequently, in due course, we can then bring more patient financing, utilizing the pension funds and asset management funds that are available domestically in our market to finance this and prepare ourselves for the onslaught of the massive investment that is looking to come into this space. Now, let's face it, there's so much money awash right now in the global markets. And why is that? Just look to the developed markets. The returns on investment is so low that you're paying some governments literally for you to invest in bonds. The bonds, for instance, you're paying the German government, you're paying the British government to invest there. So investors are looking for alpha elsewhere, and they're nowhere better to go right now than developing markets. And for me, there's a never bigger attraction than the Nigerian economy. It's the largest economy in Africa, and people should be falling over themselves to coming over here. But the question is, only 2.6% of green financing has been accessed by Africa so far. So unless we break and solve the problem in the largest economy in Africa, AKA Nigeria, I guess we have a problem elsewhere. So I'm hoping that my fellow panelists, who I shall begin to name now, will come to bear and tell us how we're going to solve this problem and build on this. The second point is that all of you know that we have COP26 coming up in November in Glasgow, the beautiful city of Glasgow, which will be really, relatively cold compared to Nigeria. But when we all, congregate there, I'm sure there will be a lot of body warmth to keep us all warm. But one of the things and one of the objectives of this assignment coming out of CFA Nigeria is to actually have a project which we will be able to showcase as having supported as a template for future projects, and we will showcase this at Glasgow. So today's workshop is not just a congregation of people to talk shop, as it were. It's actually to start the beginning, to create the beginning of something which is massive and we hope will bring about a more sustainable development in Nigeria. Now, without further ado, I'd like to invite and introduce my panel who will be speaking today. As I said earlier, we have a number of people. The first person, obviously, is the man who is looking for finance, the man who has been in energy production and energy distribution in Nigeria for some time, in the name of Mr. Jasper Gaff von Herdenberg. He's the CEO of Daystar Power. Welcome, Mr. Jasper.
Thank you, Olamide. It's a pleasure.
The second person, obviously, that we go to when we need some money is the bank, typically. So representing the banking sector is Mr. George Ogbonaya, who is a Vice President and Group Head Business Banking at FCMB Nigeria. You're welcome, sir.
Yeah, thank you, and good morning, everyone.
Now, as I said earlier, when we get all risky and we're trying to find money and we can't find it and we're looking for some sort of cushion and a wrapper, as it were, we speak to the guarantors. Today, we have with us Mr. Anthony Osonye, who is the CEO of Impact Credit Guarantee Limited. Welcome, sir.
Good morning, and thank you, everyone.
Now, we'll typically have a platform, what we call the finance formation setup, typically a place where people come to, to pull in funds. We'll normally look to the exchanges, but in this case, because we're looking at projects that are not listable at this point, we are privileged to have Mr. Yemi Osunebi, who is the head of private capitals of the FMDQ Private Markets Limited, to speak to us and join this discourse this morning. Mr. Yemi Osunebi, you're welcome, sir.
Thank you. Glad to be here and good to see everyone.
And finally, I know people are thinking, where are the women? You know what they say, they always bring the flavor and the intelligence. So today, we're privileged to have with us Miss Ian Adams, who is a Senior Director and Head of African Finance Corporation Capitals in Nigeria. Miss Adams, you're welcome. Is Ms. Adams with us? Miss Adams, I'm sure she will join us in due course if she's not already here. If you're here, we cannot hear you. All right, she's here. You're mute, by the way. You're mute.
Yes. Okay. Well, thank you so much, Olamide. Happy to join this panel. And also thanks to both the British government and the Nigerian government and yourself for organizing this very important session. Thanks.
I don't know what the view is out there, but if it's possible to just have the panelists at the moment rather than everybody else, that would be great, because then we can actually have a focused discussion. But I'll leave that to my able technical people whilst we carry on. You know, I think for me, the best place to start will be with Jasper. Jasper, you've been in the energy space for some time, and there's a reason, I'm sure, why you set up the company that you did. It's obvious to me, probably not so to everybody else. Energy is a big sector and a massive need in Nigeria. Perhaps you can just elaborate so we're talking about access to finance today as you build up your business. Can you just express to us some of the pain points, if you will, in about a couple of minutes that you've had actually accessing to finance, and some of the things that you would like to see the bankers or financiers help you with as you grow your business, please?
Sure, very happy to, and thanks a lot. So I think, I mean, what's important to mention initially is that the renewable energy space in Africa is still relatively young, right? So companies are not huge corporations or developers. And especially for smaller companies, access to finance is always more difficult than it is for the large corporations. So especially when we started the business, that was in 2017, access to finance was an extremely big problem. It was very difficult. And it has gotten progressively easier over time as the company grew and the track record improved. One thing that is, however, quite noticeable is that the access to local financing, to Naira financing, is a lot more difficult than to dollar financing. And the reason for that seems to be that was multiple reasons. One is that international lenders, especially the big DFIs from Europe and the US, they have this very strong mandate to invest in climate finance, and they're really desperately looking for projects. So getting financing from them is easier, not easy, easier. While when you talk to Nigerian lenders, the mandate is not as strong and not as clear. And there's also a much stronger desire to get a different kind of security from the Nigerian banks, for instance. So a typical question that one would get when asking for financing from a Nigerian bank is, don't you have any property you can pledge as security? And no, we don't have any property. You know, we're not a real estate developer. We have solar systems and we have cash flow associated with them. But if a lender doesn't accept these as valid security, it gets very difficult to raise local financing. And that is a problem for the industry because obviously in Nigeria, we are in an environment where the currency is depreciating over time. Borrowing all your financing in dollars or euros or pound is a big risk. So Naira financing really is the way to go. And we really need to open up that space and make it easier for the banks and other financiers in Nigeria to provide money to renewable energy projects because they are attractive. They do make money. They are able to give a good return on investment. But it's really about bridging this gap about what's acceptable security for these lenders and what the developers can actually offer.
So ideally, what you're saying is that rather than collateral, which clearly you don't have in the traditional sense, what you'd be looking to the financiers to consider is taking your solar panels and your batteries or your receivables, as it were, future receivables as collateral for the lending that you're seeking, I suspect.
That's absolutely correct. And that's what has been happening a lot in East Africa, actually, that receivables, a lot of the solar power financing there is receivable financing, right? So you look at a solar system and you say, well, this is going to last for the next 20 years. There's a stream of receivables against this that we're going to be getting. And actually, that's an ideal situation for a lender, right? Having a steady stream of receivables to pay off a loan, to pay interest on, that's actually a very good situation to be in principle.
Right. So I guess the question then one would ask is, why isn't this happening? Why is it that the financiers in East Africa are happier, as it were, to take this asset as collateral and those in Nigeria are not? Perhaps it's a right segue into that. Maybe we should bring Mr. George Ogbanaya of FCMB into the mix at this point to explain to us, perhaps, what are the challenges that the banks have in taking this on? Could it be lack of knowledge? Could it be the way the credit, internal credit risk management is set up? Could it just, we don't know. So perhaps we should ask the gentleman himself. Mr. Ogbanaya, perhaps you can provide some intervention at this point, please.
Okay, thank you, everyone. Always on the hot seat. Okay, let me just start by saying that I think we are in a better place today than we were like 2 years ago. And I speak for FCMB particularly. Early this year, the board gave us a mandate, and to make renewable energy a key sector. And what that means is that we have a mandate to increase the portfolio size from about, I think it's around 0.3% now to about 5% in next 3 to 5 years. So with that kind of decision, you'll see a lot more interest. The other thing I want to say is in over the years, I remember early days when we take credit from this sector to maybe credit committee, you probably be the only one talking. But today, the information, the knowledge is there. So, and that we begin to see that reflect in the number of credits that have been approved. As a bank, just in the last 1 year, we've had almost 3 billion dedicated to certain schemes within this space, pre-approved. These are the kind of things we have seen like 2 years ago. So so these are the kind of things you would not have seen like 2 years ago. But having mentioned some of this progress, let me speak to some of the issues just for the running, curve, for the running point. Traditional credit is credit, whether it's for renewable energy or it's for oil and gas or it's for manufacturing, and they are basic fundamentals in credit. And naturally, every credit policy will discriminate against startups. And like all of us noticed 3 years ago, almost every player in this space was a startup. And they also came with additional rates. Not only were they startups, they're always asking for a concessional rate. So traditionally, the principle behind every credit is that when I'm taking more risks, I charge higher. So here is a more high risk product, also asking for a very low risk, cost. You want me to price you at a price I will charge a very high, almost zero risk corporate. So that's created the dilemma, and for me, so it's important to understand that issue. So for most banks, it was an issue. So you're high risk, you're a startup, and then your pricing does not even give rooms, to cover for the kind of risk you want me to take. So for most traditional lender, that would be a turnoff, and I think the good thing about this sector is because of the impact it's going to have on the economy. So over times, we have understood that this is an enabler. It will enable different kind part of the business. So we are now beginning to see how we can de-risk this. As a bank, part of the first thing that we did, was to go into partnership. I think we are the first set of bank that went to partnership with some of the DFIs, both international on guarantees. We got close to 6 billion naira worth of guarantees to enable these particular sectors, and we structure those guarantees to do two things. One is where they are inadequate collateral or non-acceptable collateral, because the bank have different classes of collateral. We can use this guarantee as an enabler. And the other one was also where the risk was basically because the startup, we think we don't have a deep understanding, so that guarantee comes in to mitigate that fear of lack of knowledge, because the basic principle around credit is I don't learn to things you don't understand, so we use that guarantee, partial guarantee, to mitigate that risk. So that was how we dealt with that, with our risk management, to say, okay, your fear is I don't understand this space. Yes, okay, don't worry, at least you have a 50% loss assurance, for the risk you're taking, even though the other mitigants, we can't provide. And when the issue is because of lack of collateral, we provide this. Okay, you're concerned about the quality of the collateral being presented, which in most cases are usually either the generating asset, or the project itself. And if you look at some of these projects, and yes, they might have collateral, but the control, because if you talk about receivables, the control was also an issue. I'm not to find out that was like different players and different sectors have different dynamics. For example, those in C&I, and their risks were basically two kinds of risks: the payment risk, the counterparties you are working with, and then the ability to deliver at a great price, and be able to sustain over that period of time. And I'm also speaking to that. So if you're in C&I and you're looking at getting a bank credit, it's important that you factor in the weight of your counterparties, because these are something the banks will be taking, And the other one is also your risk of being able to deliver. And one of the things I check, particularly on my team, is when we do C&I, we pay special attention to the energy efficiency ratios you are bringing in, because we understand that Nigeria is a high capex business, and interest rates are naturally higher. And so on the first surface, it's not like it's a cheaper alternative. So if you deliver energy and you put in too much assets to the point that whoever the end user, finds alternative source, as business changes. Now that Nigeria has a lot of valleys around the place. As you get shocks in the economy, people will want to cut costs and they might want to go back to a cheaper source, So if they do that, my exposure might be at risk. So part of the things to actually check is also look at what level of energy efficiency you're bringing in. Can we translate that to some form of cost saving for this client to guarantee that regardless of what might be the experience he has, he will have a stronger motivation to remain in this contract for the next 7 years, And so these are some of the things we looked at. And I know we have, and then over time, for those in mini grids, we started finding out there are certain schemes. And what we've done is to try and put them on that schemes and pre-approve. Because part of the things we found is that the experience might be in head office, but the client might be in Abuja, for instance, or in Kano, but it has to talk to relationship manager who probably don't have the same level of experience. So by putting these things into schemes, you're able to streamline that. And then another thing we did was also to introduce a dedicated desk, for these sectors in the head office. That was done last year so that they can provide some hand holding. And because of all of these things that we have done, that's why I said that we're in a better place today than we were like about 18 months ago. And the number of transactions I'm seeing being approved on a monthly basis speaking to that. So
thank you very much, Mr. Ogwanaya. You've spoken rather eloquently on some of the issues that we faced in the last couple of years. I'm sure Jasper has been listening to you and restructuring his mind in terms of how best to position himself. You speak to a number of things, obviously, which we would like to address in due course and needs to be addressed. You talked about knowledge, you talk about control with knowledge within the banks, you talk about control and how money is spent by the project proponents themselves. You talk about the environment, the economy. There's a lot that we will, and I'm sure, like I said, we will have a bigger discussion much later. And the idea of this is to obviously pull out opportunities and discussion points that we will take to the ranch and develop. But there are just two things. As a banker, I sympathize with you. My sentiments are with you, but at the same time, I need to look at the investment opportunities and investment gap. I mean, you speak to 3 billion naira, I think is what you said, over 5 years. Very small money, considering the fact that only recently 3 billion was
5% of the portfolio size. That's a lot.
5%. Oh, I see.
From 0.3% of my portfolio to go into about, that means I have to go faster in this space than any other sector. So that's actually.
Thank you for that correction. And hopefully all the banks would increase the portfolio as well, and then we'll have plenty. At this point, actually, I would like to bring in Mr. Yemi Osunibi just to speak to, because recently there was a bond that was raised, a green bond that was raised to finance some solar implementations, similar to what Jasper does. And that was actually supported by the Green Bonds program, or the Nigerian Green Bonds program, in terms of the verification and all that stuff, and verified also to that effect. So if you can just, in a couple of minutes, Mr. Osunibi, time is obviously against it, but if you could just speak to some of the things that you encountered in actually putting that transaction together. And if you can also speak to, give some advice to others who might want to raise money in the same way through your platform.
Excellent. Many thanks, Olumide. So, I think, the ecosystem has to be patient with, banks. You get a sense when people say, new companies talk about, banks don't finance, and Mr. Ogbonna has spoken very, very well on the limitations, but also the opportunities that the banking sector has for climate finance. But I think people should look at all forms of financing and match their phase of growth with the markets that are available for them. And that's what Solar did. There are companies that are today who have sufficient collateral, who provide the phase of maturity of the business that can tap into either bank financing or the public markets. For private companies who are still in that startup phase, in every other market, you would go to the private markets, whether it's venture capital financed or private equity finance. I know that's equity. And what has been missing has been the private debt markets. I think that's what FMDQ has done very well in the last 18 to 20 months, where the private company bonds initiative has sort of come to life. Now, to talk about what FMDQ is doing with the private markets, there's been an evolution from where you would go to one private equity firm or one private debt firm and say, I want money for this project, and you're sort of talking on a bilateral basis. We've brought some of that private market onto we sort of exposed it to a platform that functions as an organized marketplace and essentially a capital markets platform. So you still have on our platform, you have transaction sponsors who are registered members, issuing houses, financial advisors, you have solicitors, you have trustees, you have all these different people who do different work to ensure that a company that is offering a security or is trying to raise money is doing their job very well. In addition, because it's a green bond, was a green bond issue, you have the green bond certifiers, you have people like Financial Sector Deepening Africa, Climate Bonds Initiative, all of those that are looking at those projects to make sure that that they fit into the profile of an actual climate finance project, to make sure there's no greenwashing and things like that. And so what we were able to do is by providing this sort of support for them and this sort of ecosystem for them, they were able to inspire confidence in investors. On the private markets, we have guidelines for the noting. We call it the noting of private company securities. Essentially, we're saying that companies who want to raise capital should bring themselves under some level of governance and disclosure obligation. So if you note your securities on FMDQ private markets, on our private company securities portal, you will have quarterly reporting obligations. You may have annual reporting obligations. You will, if you've got a credit rating, you update those credit ratings. And on that platform, your investors are onboarded and they can sort of see and track your performance over time. Your trustees will ensure that the use of proceeds, the proceeds are used very well. All your certifications, all your reporting is posted on this private company securities portal. It's an information repository, so your investors can track your performance. This is how we've been able to, we believe, inspire confidence in the marketplace. In the last 18 to 20 months, we've had over 245 billion naira in securities noted. And I know, again, to Jasper's point, we do need a domestic capital market, because if you raise $20 million in equity, over a 5-year period, or in bonds over a 5-year period, even if you do get concessionary financing, devaluation may work against you unless you can purchase some forwards and futures over a 5-year curve to sort of hedge that FX risk. So the domestic market needs to grow, and it is growing, and our platform is providing that. So in addition to the support work FMDQ sponsors and collaborates with the Climate Bond Initiative, with Financial Sector Deepening Africa, FC4SL, and on the private markets, that platform that inspires confidence for people to invest in companies that are young, different phases, as young as a year and a half, to companies that you will consider middle market companies, to some mature companies that are still private, but maybe still don't want to or cannot yet tap financing from the public sector. The private market exists for them. We have from just plain vanilla corporate bonds. We have promissory notes, things that are 1 year horizon that can meet your working capital requirements. We have instruments that sort of meet Islamic finance requirements. So we have a sukuk products are available, and then of course we have the green bonds product. And fairly soon we'll be introducing participating debt notes that for maybe higher risk projects that investors feel they need more equity kicker, equity upside. So there's a range of products that we've designed and will continue to design that will be available on the private markets. We continue to try and expand the investor pool. We have asset managers, trustees, finance houses, all kinds of institutional investors, I must say, institutional investors. People here who've been in the market for more than 10, 15 years will remember that Nigeria's private placement market used to be really vibrant. It went down with the global liquidity crisis. It's never really recovered. It's still there. It's still there. And what private market is doing is to bring some level of disclosure, some level of governance to inspire confidence in investors, so that startup companies, new companies, younger companies can tap capital. I wish we were around when Jasper was raising his money. We would have been able to serve him well. But, you know, small starts, 1.9 billion, I think, was raised by One World Solar energy company. And energy needs are so massive. And again, you know, for that energy sector, you know, you saw, I think in your opening statement, you talked about sort of the phase of life. You start out with your personal funds, with some DFI grants, concessionary financing, with some bit of a short-term loan, some equity from venture capital. By the time you want to start expanding and just churning out your panels and you have your client base, you're signing offtake agreements, you really need to have your financing in place. And that's where we think we will be there for you. And what we're increasingly trying to do with some guarantee funds, I'd love to talk to the credit guarantee guy on this platform also, lady on this platform, is we're getting some credit institutions that will provide credit wraps to some of these institutional, to some of these offerings that are coming on our platform. In part of the 243 billion that or 245 billion that has been noted so far, we've seen really good infrastructure projects from transport, roads, water projects, schools, hospitals, agriculture, and energy and real estate. And we're even seeing a pairing together of energy and water, where a number of small energy, water, and agriculture, where hydro dams are being concessioned by the federal government. People are bidding to add solar projects to that hydro project, and even adding water for irrigation for agriculture. So I think that once this investor pool and this investor market develops, you'll begin to see infrastructure project. You know, all the creativity will come together. You'll probably be getting better collateral. But if you don't have collateral, you will find people who understand what you're doing, are willing to take a risk on it. And even if they want some sort of risk reduction or some sort of risk sharing or risk first loss provisions, then the credit agencies, credit institutions can come work to provide that wrap. You know, again,
thank you very much.
Q&A will be able to take more questions. Yeah,
we could look. Like I said, we will have more time to talk about this in the months to come. We can speak, but obviously we're limited in time today. So effectively, what we're saying is, to the likes of Jasper, there's more than one avenue. There's just more than one to the bank. Your platform also provides that. Now, you both yourself and the banker have spoken about first loss, and you've spoken about guarantees. Now, just before I go to Ms. Adams, who will talk to me about the FC and hopefully talk about first loss and investors and things like that. And because I know that, and I like to plug this, we have you talked about local currency, which is very important. The local currency bond fund is one that actually is invested in Nigeria. That's one that is managed by, sponsored by the FSD Africa and managed by Lion's Head, I believe, on their behalf. That's also financed and invested in infrastructure projects in Nigeria. One in case is the North-South Power, which was done a couple of years ago. But just before I go to Ms. Adams, perhaps once again, just to clarify, maybe Jasper, in a very single minute, can just describe your business again. What type of infrastructure do you actually provide, very quickly, so that the guarantors and the financiers can also tell you how they can help you, please?
Sure. So what we do is we install solar power plants on the roofs of commercial and industrial businesses, and then sell them the power that we produce over a 10-year contract, for instance. So, and we set the price of the power at a level that's attractive for them, so that they save significant costs versus burning diesel or taking power from the grid through the solar system that we provide. So what we have is a solar system it's a very long-lasting system, and then receivables from this client, which are typically top-notch Nigerian companies, over a multi-year contract.
Thank you very much. Now, before I go to the Impact Credit Guarantee Company to provide the guarantees for all of this stuff, maybe I'd like to speak to another investor at this point. Bring in Ms. Adams. Now you've heard what is required. How do you fit into this space, please? Ms. Adams, the floor is yours. I believe you're on mute. You're on mute, madam. Perfect.
Okay, perfect. Okay, so there was a little problem that I wasn't able to unmute a few times. So I think just a little bit on, let's stick with Jasper's company. So I think for me is that, first of all, there should be a huge opportunity for alternative energy solutions in Nigeria, because there's a problem. And the problem is energy is there, but it's not affordable to most people. So whatever solution that you bring, it has to break down the cost curve of energy in this country. And you got 200 million people, you've had a lot of small businesses. So for me, and I want to link to East Africa, I am East African. So the reason why the energy solutions have happened in East Africa is that they first targeted people that don't have any access to the grid, because we don't have a grid in most East African countries. And then, but people have a mobile and they have a payment system. So what you have is that even the rooftop spoilers, we have to target a market segment that is really not rich enough. Because I was a little concerned when you say these are top-notch Nigerian companies. So one is we got to know the cost, which you said it's saving. So what would be the cost of the system per kilowatt hour, and how does it break down the energy cost in Nigeria? Very important to me. Second, I think what Jasper's company needs, which is highly available in East Africa, is growth capital, so that you have a very well capitalized company. And frankly, the banks then should feel that it's very easy to support, and you should not need a collateral, because what you need is that a revenue stream that you can basically monetize, so that so Jasper can borrow, offer terms of financing to the companies too, for them to pay this particular equipment over time. But I think the market segment, I think, is so important. I don't know much about the regulation, if everyone is supposed to sell to the grid, but that has to change, because if you can sell directly to the consumers, and I can put the roof solar in every place, actually you have a humongous market, because people don't turn on the electricity in most of Nigeria because they can't afford it. So if we can break the affordability curve, and we know that it's a huge demand from people who couldn't afford or who were uncompetitive because of the cost of power, I think we have a solid project. And we could put an equity, let's say, stake in that type of a company, so that it can have the right capital structure to attract the lending. So I think a little bit on East Africa, there is a lot of venture capital, there's a lot of other capital that one can do that. Second, I think it's helpful when the banks have a targeted desk for this, because you cannot sit a guy who's doing multi-billion-dollar contracts with someone who's starting a new industry. So we find that the banks that have basically a sustainability unit or a climate unit do better, and there's targets at the bank level. We at AFC, we are committed to the sector, we are committed to Nigeria. We have an equity stake now in InfraCorp, which is supposed to also do significant amount of power sector projects in Nigeria. So the reality here is I really want us to get to how can we break the cost curve in Nigeria? There will be a lot of solutions. And how do you capitalize Jasper's company properly, so that, you know, then it becomes like a retail loan, right, to the consumers. And that's what banks understand. And it could be their clients, right, that they can lend the money to, and they have deposits from them on other businesses. Then it becomes more of a cash flow product. So that's my little intake. I can come back. I don't want to monopolize the conversation, but we got to start with what is the problem we're solving and for which market segment. To me, this is important. And renewable energy in East Africa started with the bottom of the pyramid. It did not start with the people that have electricity. So we need to really realize that. So company like D-Light, B-Box, which is a Dutch type of company, basically you have a suitcase in a small house in a rural area. You just need that suitcase to give you electricity for lighting your refrigerator, you know, everything you need in that house. And you get it and and there's a loan attached to it, so you pay over time. And you got to be very creative for us to crack the Nigerian market. That's my view. And you need a lot of equity, both at Jasper's company level, but also a little bit of refocus on how we approach the sector. But I think we got to start with the problem. Energy is unaffordable. How do we break the cost curve? Then the market will happen.
Thank you very much, Ayan. Thank you very much for that, especially that input from our friends in East Africa. Speaking to that sector, I believe there's a 500 million injection from the government that the REA is working on to provide access to energy in that space. So there's plenty of people talking in that area. And as for Jasper and I have been talking about securitizing some of his future receivables into some sort of a bond. So I'm sure we'll come knocking on your door at some point to see how you can be a first loss investor in that project. But there are many Jaspers. There are many Jaspers, and we need many Jaspers. And of course, the bankers have talked about the fact that there's a lack of collateral and we need guarantees. I know we've exceeded the time limit on our panel discussion. We're meant to be in questions here, but I think it's important that we bring in the guarantor now to just speak to how we can basically provide some guarantees, having received first loss investments and the sign off by the AFC as a big investor. Now, how can we guarantee this loan so that we can have many more of Jaspers showing up at the banks and the banks happily providing the required finance to them? Mr. Perhaps at this point, I will go to Mr. Asonye, please. The floor is yours, sir.
Okay, good morning once again, and thank you for having me. I think I'll quickly start by saying that finally help has come to Jasper, to George, who is already partnering with me in this regard. I mean, I can remember George last year, we were able to close out a deal on this segment, about $1.2 million. So for impact, I mean, the CFA initiative is very much in line with our core mandate of facilitating access to finance to small businesses. And this is simply by providing partial credit guarantees to banks when they lend to the MSMEs, the small business segments. And this creates an incentive scheme for them to continue to deploy more loan assets to that segment. The SME segment has always been looked at as a very high risk segment by lenders. And what we are doing essentially is to de-risk that segment by providing partial credit guarantees. For impact, we are, I mean, very much, pretty much a startup. We commenced business just last year, but again, we've been able to see how huge that market, the MSME market is. We've been able to issue guarantees to the tune of $80 million from last year to date. And in that space, if you open up the portfolio, you'll be amazed to also see that we've been able to issue guarantees to the tune of 2.5 million to power-related transactions. For me, this is not anything to be happy about, to rejoice about, because this is just about 3% of the entire guarantee portfolio. I wish I had more. The constraint there for us is simply that we feed off the banks. So the banks have to, surface deals to us to review, get comfortable, and then issue a guarantee coverage for those. What I'm calling is that George and Jasper should bring more transactions. We are open for business, and once we look at them, they are bankable. Of course, you get a guarantee, because the guarantee, to an extent, now serves as a collateral substitution. In the SME space, the problem has always been the lack of financial capacity as well as collateral. And by providing the partial credit guarantees, we try to close that gap, create an incentive for the banks to, to look at those deals again, as long as the fundamentals are there and also the cash flow remains strong and able to repay, so sustain repayment of the loans. We are happy and always, there to support such transaction. The issue generally we see is that I think there's a general lack of enlightenment in terms of, one, the potential beneficiaries of this scheme. There are quite a lot of small businesses out there struggling with power issues. I don't know whether we've been able to put together a marketing platform to reach out to them. And I know once they're aware, the next step is for them to go to the banks, and the banks will look at those deals. And like I said, since we feed off them, once they are comfortable and want to, put their resources there, their assets there, they will always come to Impact and other credit guarantee funds, and we can look at those deals on their individual merits. And if the eligibility and the risk acceptance criteria, fits into my appetite call, then of course we'll issue those guarantees. So for us, power, like agri, health, really are priority sectors, and we'll be happy to continue to, get transactions from the banks in that on that very segment, power and alternative renewable energy, clean energy, and related transactions. So what I would also want to advise is that we need to simplify this, because I think we are all looking at the actual implementation. And I know, leveraging from experience in my days as a banker, what we can do, maybe at the next session, I think I brought this up yesterday, is to have a more technical kind of and detailed discussion. And this will help us going by the results outcome of the market sounding that, ought to have been, undertaken. We can come out with simple, very simplified lending programs. And again, now also put up a platform that will go out there to be able to, reach out to the MSMEs and also evaluate their needs and challenges. Because if you look at that space, you need also ask yourself, what will be the switching cost? What's the attraction? The cost benefit analysis and all that has to be done. And also the platform to reach out to them, like Mrs. Adams rightly pointed out, you need to have a platform in every institution and in every bank to be able to take care of their needs, to interact with them, and then, put these transactions in a bankable form, well packaged. And I'm sure, all the players in the chain will be interested in, giving some form of assistance, either through loans or even guarantees to such deals.
Thank you very much, Anthony. There you have it, folks. Everybody's calling for another and more intense and elaborate workshop. So clearly we have the sponsors of that workshop sitting right in front of us. The AFC will put some money on the table, DBN and the guarantee people will sponsor it. We will have a much more elaborate, a more detailed workshop, which could probably last half a day or a whole day, because this is clearly a major issue. It needs to be resolved, and we need to catalyze a lot of private sector finance into this. Look, time is much against us. I'm hoping that people will indulge us and probably extend by another 5 minutes, because obviously it's not just those on the panel that have been listening. We've got a massive audience, I believe, of near enough 300 people here, 260 to be exact. Some people have dropped off. So, I'll just reach out to a couple of questions from the audience. I think one that comes to mind is from Mahmoud Diallo. What are the lessons Nigeria can learn from other African, Asian, and Latin American countries that have successfully attracted climate finance? The ideal person, obviously, for this is probably Ayan. She has made reference to Africa earlier, but if anybody else also has something to interject, maybe I'll start with Mr. Adams.
Okay, so I've been unmuted. Thank you so much. So very quickly, I think first of all, we do need to take into account that Nigeria is already rich in both oil and gas resources. So when we are comparing Nigeria to the other countries, we cannot ignore the fact that there could be some stranded assets in the context of Nigeria. So the transition story has to be slow. It also has to recognize that first, some of these alternatives like solar even is not 100% yet. There are intermittent issues. So you can wisely use the gas to expand access. So, but we gotta talk about what problem we're solving. We need to have 100% access for Nigerians, the consumer, we also need to have for the SME market. And I think there's a question on segmentation. I want to address that. I think you start with the people who really need the energy, who are not having access to the energy. Then we need to talk about what's the cost curve. So if today the price per kilowatt hour is, I don't know, $3 per kilowatt hour, most of Africa today is actually getting the renewable component of the energy mix for less than 10 cents per kilowatt hour. That makes it very affordable. And Nigerian industries, if they have access to that cheap power, they'll be very competitive and they'll be more profitable. And some education is needed there. Again, I don't know the regulation of Nigeria if everyone is supposed to sell to the grid, because that will present new challenges. So what has been the experience in other countries? So I would divide that into two. The countries that don't have the same resource base as Nigeria, it's been easier. And I've also worked in South Asia, in India. So the reason why India has transitioned very quickly is that they don't have oil and gas. They have nothing. So they have hydro, a bit of hydro, which they buy from Bhutan. So they had an energy crisis. So first they relied on coal, then coal ended. And they had a crisis because there was no more coal. Then they had to go way into renewables. However, they were also, like in my past, one of my past roles, we kind of invested in a green bank in India. It was a non-bank finance company, so not a depository, but we asked the banks to put in equity, we put in equity, and it was targeted to really start the whole solar movement. So something similar could be here, provided the regulation allows, but we need to look at other countries like Indonesia that's making, so Nigeria is a rich resource country. So we need to look at that mix and making sure that there is no any, how do I say it? So we include the existing resource, but we need to use the alternative to bring down the cost. And I will really start with the SME business segment, because they're the ones that are suffering the most. If we can provide that, then the larger guys will come in later. That's my view. And I don't know if I have answered the question. So we do need a dedicated company also in Nigeria. I believe it's too large of a market. We also need different forms of finance, and some of them we have talked about in this particular area. We need to incubate like a smaller green bank, MBFC, ask the banks to put in money. So that kind of protects the bank's balance sheet, because banks have deposits, let's not forget. And they're more it's the most conservative institution in the value chain. So because they have to protect depositors, and they don't understand this, even though it's not as risky, but they don't understand it. So I think that's how I would go about it. And that's what I would do. But a lot of venture money, a lot of support initially. It's a new industry, training, because there will be a lot of jobs. There's a lot of joblessness in Nigeria right now. The people who are doing the solar, the guy who's connecting it, the guy who's servicing it. So there is a job market also. So I'm going to stop there. Sorry, I know I took too long. Thank you so much.
Thank you very much. I guess Jasper has the potential to be a larger provider of employment. So we need to support him and his fellow folks. You made reference to policy and regulations. Clearly, we need to look at that. Our regulation obviously differs from other countries. We need to look at that and see how we fit into this. You made reference to the Green Bank. I know that I was having a conversation with one Mr. Emmanuel Taderi recently about who is the executive secretary of the FC4S. We're talking about what do we need to do to set up a green bank in Nigeria. So, more conversation to be had. There's a lot of conversation going on in silos. It appears to me that we need to bring all of this together onto one platform so that all of us are speaking of the same hymn sheet and actually creating solutions. There was a question here. I'll go to two questions before I move on to the next panelist. Jasper, somebody says here that you, Uche Nwachukwu said, your business seems to focus on lease to own model. Do you also play in the EPC model and PPA model space? That goes to Jasper.
Yeah, we do. So we do PPAs quite a bit. We also do EPC when requested, but usually most businesses don't want EPC, so they don't want to pay for solar systems themselves. I think the situation we do have in Nigeria is that capital is scarce at the end of the day. It's something that's in demand. So if you ask a business the choice of whether you install the system for him and pay for it and he just pays you monthly, or he buys it himself, he will always, or almost always, they will opt for going to a PPA or something like that, and rather use the capital that they save with that to expand their business, build a new manufacturing line or something like that. And that makes sense, right? It makes sense that they concentrate on their core competencies, invest in their business, and we as specialized players invest in the power.
Right, thank you very much. So one final question, which I can answer myself. Sunday Idowu says, can the aviation industry also benefit from CF? Well, the aviation industry is kind of difficult right now because, you know, they're very high meter. The sector is a very high meeting sector. Is one of those that we're looking to put together criteria for in the future. So watch this space is what I will say. Look, folks, we've heard it all from the panelists. Thank you very much to Ms. Adams, to Mr. Osunubi, Mr. Ogbonaya, Mr. Hardenberg, and Mr. Osanya. Clearly, we, like every other country, we're in a different space. Each country in getting to this net zero situation, we're all in a different trajectory, and we need to recognize that with Nigeria, our blessing is also our burden. We have oil and gas en masse. We've got to move away from crude oil. We've got to move from oil and gas. But perhaps, you know, gas might just be that conversation that could be a transition strategy. Who knows? The jury is out right now. Some people say the methane implications in the event of a disaster could literally throw us back many years to come. But at the same time, you know, why not use what it is you have to get to where you need to get to? I guess this is why myself and some colleagues set up the Climate Transition Limited to help companies such as banks review their portfolio and transit. At this point, I would like to move on to the next phase of this. The time is really against us. I beg your indulgence for another 5 to 10 minutes. I will give the stage at this point to Mr. Nick Aslam, the project director of the CFA Nigeria, to speak to us about what the next steps are. Mr. Nick, the floor is yours, sir. Nick, I think you might be in mute.
Thank you, Olumide, for giving me the floor, and thank you to all the participants, all the panelists for such interesting and instructive discussion and analysis of this climate finance landscape and some of the opportunities therein. I think we've really seen in the last hour and a half in a microcosm what the CFA in its full form might be, convening different institutions, grasping some of these opportunities, overcoming the barriers. And already I think we've seen people start to make connections and for different types of project finance, infrastructure finance. And the panelists have really made what they can offer clear. Somebody mentioned, I think it was Mr. Anthony Osonye, that we, and backed up by Olumide, that we need to have more discussion on this, more detailed collaboration, and that will be some of the work that we're doing over the next month. We'd love to speak to you all again, around some of the issues today, and then also about the actual design and mandates of the Climate Finance Accelerator. Where in Nigeria should it be based? Who should be party to it? Which climate finance barriers and opportunities should it focus on? Which sectors, and so on. So there is going to be another workshop on the 31st of August. This time, building on what Jasper has said, started with a panelist of project developers and SMEs, and we'll be looking at things from that point of view. But all financial institutions, plus the federal government and state governments, will be asked to that workshop too. There will be a third workshop focusing on the federal government and state government perspective in September too. So watch out for the invitation to that one. Thereafter, two main tasks exist for our team. One is to design the Climate Finance Accelerator based on the discussions and views that you have to make it most useful and most salient to you. And that will happen in the course of August and September and October. And then we will seek to prove the concept, as Olumide mentioned right at the beginning. We'll seek to prove the concept of the CFA by piloting some projects to connect them to finance and to demonstrate in advance or around the time of COP26 that this is possible and can be a really useful asset to the climate finance evolution in Nigeria. So keep in touch. Many thanks, and back to you, Olumide.
Thank you very much, Nick. This is, in my opinion, has been an insightful and informative session. I've enjoyed, especially the panel discussions, been enlightened by some of the topics that have come up and the things that have been said. But more importantly, being encouraged by the enthusiasm which has come from the guarantors, the financiers, and I think Jasper and his fellow project proponents must be in a better place now than we started. But look, the work has just started. My former boss often said to me when I was in the Nigerian Stock Exchange, often said to me that the reward of good work is more work. So, you know, we have plenty to do, clearly, and this is an opportunity for us to come together as a group to do this. I'd like to thank the many, about 600 and odd people, 260 people at one point who joined this discussion this morning, for your time, for being with us. I hope that you've learned something. I hope that you've been encouraged, especially those who have projects to bring to bear, to contact us at the Climate Finance Accelerator Nigeria program for more insight. The financiers who are listening in, who have heard what FCMB are doing. I know there are other banks who are either in this space or trying to get in. There's more to be done. Apparently, we had in total 268 at one point. So that for me is a win. Can I ask and just seek the indulgence of those who have participated today, the panelists, Mr. Guy Harrison, if he's got some time, please. Mr. OMG, I know it's rather early where you are. And those behind the scenes, if they could just stay on whilst just for another 5 minutes after everybody else, just to wrap up. But more importantly, we couldn't have had this session and the success of it without those behind the scenes, the technical people who led by Titi this morning, who have made this happen. You know, the technology to make sure that we're online to be able to project this. The organizers who have worked tirelessly, Ese, Antonia, comes to mind. They've been tirelessly working behind us. The crew from the PwC and Ricardo, who have worked, Mr. Ian Callahan as well, Guy Harrison, who have been very, very supportive of all of this stuff. Look, I can go on and on. We've got the teams like people like Uzo, Tune, look, and all the chief advisors to the program. Obi, you all know yourself. Look, apologies if I've left you out. It's not intentional, but look, if I had all day, I will mention all your names. Very good. Thank you very much for making this happen. But like I said, this is just the beginning. Watch this space. We're coming back at you. We need to develop the economy. We need to bring sustainable finance to us. We need to stop polluting. We need to stop polluting. We need to bring cleaner energy. We need to help our health system. The beauty of this is that green finance can support energy, agriculture, food security, that is, energy efficiency, transportation, waste management, industry, connectivity, broadband, which obviously came to our rescue during the pandemic. These are massive projects that we can all provide green financing to. And as there's more financing coming to Africa, we just need to provide the data and the transparency and the control, as the bankers have said, in managing our resources and managing our funds, so that we can get more financing from the likes of the AFC and more guarantees from the climate, the impact guarantee company. And then the bankers will be more comfortable to provide more financing to the likes of Jasper's company and many more who are looking to get into the space. One World Solar, obviously, we mentioned earlier. And of course, in the background, we've got people like the financial sector deep in Africa, who've been working tirelessly with ourselves and the Green Bonds program and all the exchanges to bring and catalyze them for capital formation into this space. So, folks, thank you very much for your time. I'm sure you're sick of hearing my voice. Have a blessed day, and I wish you well for the weekend. Thank you. Olumide Lala is my name, Climate Finance. I work for the Climate Transition Limited, signing off.